Hey guys, welcome back. I hope you had a really great weekend. So by now you've probably heard there is another hurricane in the Gulf and it is projected to come right at me. So this week might be another one of those weeks where I can't make a video every night, but as long as I have power, as long as I have internet, I will be making a video. So I'll keep you guys updated. And let's take a look at last week's price action before moving on to tomorrow's. So last week was the first week of October and we started right here. Monday was actually September 30th, last day of September, and we did open underneath the 35 EMA, and we did see that 35 EMA as a resistance until we got up to where Fed Chair Powell spoke, and that did get us above the 35 EMA. And on Monday, we did close just underneath all-time highs, and then we gapped down. And I want you for just a second to look only at the 35 EMA and the 30-minute 200 moving average. Pretend the price isn't there for just a moment. And actually, I'm just going to go ahead and take price completely out here, because once we did start turning towards the 35 EMA, we saw a bounce once the 35 EMA got near the 30-minute 200 moving average. So once we printed that first red candle, and prior to that we haven't seen any red candles, but we got that first red candle and we saw that 35 EMA act as resistance. That is when we brought the 35 EMA back to the 30-minute 200 moving average, and at that point we saw a bounce. We also had the top of the FOMC gap right here. That did act as a support for the entire week. That is back here where we saw the FOMC rate cut and then we gapped up, and that did hold us up last week. And then also before the 35 EMA bounced on the 30-minute 200 moving average, that level did hold up as a resistance for the entire week. And then once we gapped up, it flipped over to support. You can see on Friday we gapped up. We got about 3/4 of the way up the implied move. The implied move was right here, and we got right here, then dropped back down to the 35 EMA where we did find support, and then we brought it right back up. So we did stay completely within the implied move. The implied move was at 574 and we closed just underneath it. And from where we opened to where we closed on Friday was almost completely flat. It was actually a pretty big green day, but from open to close, it was a very small move. So SPY did close up 0.91%, and then SPX, we had the same price action here. We did open with a gap up on Friday, and then when we dropped back down, that 35 EMA caught us. You could see a few wicks that did come down to the 30-minute 200 moving average, but the bodies of the candles all settled above that 35 EMA, or right on that 35 EMA, and we did build a little bit of a support there, and then we bounced back up, and then from open to close was a pretty flat day, even though it was a pretty big up day. We didn't get to the top of the implied move, which was 57.65. We do still have this down gap right here protecting all-time highs, so be aware of that. And SPY did close up 0.91%. SPX closed up 0.9%, VIX came down 6.25%, and we did close completely within the implied move, both in SPY and SPX on Friday. And then QQQ, we did also start the week underneath the 35 EMA, and the 35 EMA was our resistance for the entire week until we pulled that 35 EMA back to the 30-minute 200 moving average, and then we did on Friday have a gap up, and we took it to the top of the implied move right at the start of the day, so 488. That is right where we opened, and then we dropped back down to the 35 EMA, and we saw that level as support, and then we brought it all the way back up to the top of the implied move, and we still closed within the implied move. So 488 was the top of the implied move, and we closed 487.32. QQQ closed up 1.19%. VXN closed down 3.74%, and we did stay completely within the implied move on Friday. And on Friday, from where we opened to where we closed was completely flat to the penny. And where we opened the week was right here, and where we closed the week was up 0.31%. So flat on the week and flat on the day. And then taking it over to IWM. And IWM did have a really interesting week technically. We did open right here and we opened down in this up gap, and we did get pulled back up above the 35 EMA. And this was in preparation for Jerome Powell speaking. We did see a lot of volatility on Monday around the 35 EMA. We came down, we filled this bull gap right before he spoke, and then we actually closed above the 35 EMA. Monday last week was miserable trading IWM, and we did close above this 35 EMA, and then we gapped down on Tuesday, and then we dropped down to the 1 hour 200 moving average. Tuesday and Wednesday we did see support along the 1 hour 200 moving average, and then on Thursday we gapped down and we took it all the way down to the 50-day moving average, and we did find support there. And then that takes us to Friday, where we had jobs data and we gapped all the way up. And I know I mentioned the 30-minute 200 moving average in Thursday night's video going into Friday, saying that that would likely hold as resistance. And look at that, it did. We gapped all the way up to it, and you could see the wick that goes above it, but that 30-minute 200 moving average, a very clear resistance on Friday. It was a big up day in IWM, up 0.14%. RVX closed down 3.62%, and we did stay completely within the implied move. And last week, in the middle of the week, we did have a bear cross right here where the 35 EMA slid underneath the 30-minute 200 moving average. That did turn this time frame bearish. And you can also see this 35 EMA as it's coming down to the 1 hour 200 moving average. That is where we saw a bounce. A lot of times I will look past the price and I'll take it out to make it a little bit easier to see, but 35 EMA comes down to the 1 hour 200 moving average and a very clear support there. This is a very difficult concept to understand, trading the moving averages and not the price, but the more I point it out, the more I promise it will make sense. And it's a really cool tool to use because the price moves around these moving averages. So if you were expecting this 30-minute 200 moving average to be a resistance like we talked about last Thursday, and then if you sold spreads up here, those would have closed 100% up, and we got pretty close to that. That wick takes it pretty much right to the top of the implied move. All right, and then let's move over to DIA before we get into next week's trading range. We did have a very flat week here. We closed here the Friday before, and we closed up just a little bit. So a lot of movement here, and we went absolutely nowhere. But we did open the week underneath the 35 EMA, and we did see that level as resistance for the most part. We did get above a little bit and then eventually pulled back down. We did lose it on Thursday, and we dropped down to the 30-minute 200 moving average, which did catch us. And you can see that ever since that big move, we've been consolidating back to the 30-minute 200 moving average right here. So ever since the FOMC rate cut gap up, we've just been consolidating back to the 30-minute 200 moving average. That is the bigger move in a sense. And on Friday, we did open with a gap up, and then we pulled back down. We got underneath the 35 EMA. We found support on the 30-minute 200 moving average, and then we did come back up to close green on the week. This is the only candle in the green all week. And remember, since we only have weekly options here, we have the implied move for the entire week here, and we certainly closed 100% within the implied move. And then we also closed within the implied move on that 0 DTE read for Friday. We did not make new all-time highs last week. We did make new all-time highs last Friday, and this week we did trade completely underneath that. And that could be a sign of weakness. Before that, we were making new all-time highs every week for the past few weeks, and this is the first week that we did not make new all-time highs. So DIA did close up 0.82%, and we did stay completely within the implied moves. All right, I feel like I did a ton of talking about last week. Let's go check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if you love how I break it down every night, if I help you to choose better strikes and take better trades, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications so you don't miss out when I do post new videos. If you have any questions at all, please leave me a comment. And if you want to help support me and my channel, and you just took a really great trade because of something I said, and you want to buy me a coffee to say thank you, then just hit that thank you button. And that helps me grow and to bring you more content. Alright, so starting in SPY, tomorrow's implied move is between 568 and 577, and that is from options. And the 30-day average volatility is $3 wider in each direction, 565 to 580, and the implied move on Tuesday's contract is between 567 and 579. And to the upside, directly above us, is this down gap from last week. This was after Jay Powell spoke, and the day after we gapped down, we closed just underneath that. So the bottom of that gap is 573, top of that gap 574, all-time highs 574.71. If we get above that, and that has been a resistance here, if we get above that, the next target is 577. And then the implied move on Tuesday's contract is 579. And then to the downside, we do have the 35 EMA. That is towards the bottom of the implied move, and that is currently at 567, and then underneath that we have the 30-minute 200 moving average. And remember, on Friday we did have the bodies of the candles settle on top of the 35 EMA. The wicks did reach down all the way to the 30-minute 200 moving average, and then we also have that bottom of the implied move at 568 right here. So some interesting supports near the bottom of the implied move. We also have a little up gap right here. That was from last Friday where we gapped up and we didn't quite fill it all the way. That is at 567.74, so closer to 568. And then the bottom of the implied move on Tuesday's contract is 567. And you can see that we did have a support right here all of last week. That's about 565.82, so 566, and that does line up right with that FOMC gap where we did see support the day after that gap up back here. So right there we're seeing support around 565. All right, so that should be enough for tomorrow. In SPX, we also have an implied move here between 57.10 and 57.95, and that is from options. The 30-day average volatility is a little bit wider, 56.75 to 58.25, and then on Tuesday's contract it's 56.95 to 58.10. And to the upside, we do have the same down gap, and then just above that we have all-time highs. All-time highs are at 57.67.37, and we did make those late September, and then we've seen some resistance at that level. So that is just above us, so that down gap right here, and then all-time highs. And if we get above that, then 57.95 is going to be the next target. And then the top of the implied move on Tuesday's contract is 58.10. And then underneath us, the 35 EMA and the 30-minute 200 moving average combo, those two did catch us on Friday after we gapped up, and then we pulled back down. 35 EMA was right here. We did see a few wicks take it down to the 30-minute 200 moving average, and that also takes us right to the bottom of the implied move at 57.10. The bottom of the implied move on Tuesday's contract is 56.95. So if we do have a solid drop tomorrow, I like $10 spreads, so 56.95, maybe 56.85, 56.95 spreads I would look to. And then underneath that, we do have the support that we saw right here. That's actually right on top of this FOMC rate cut gap. So in September, when we had that rate cut, we gapped up, and we did pull back into it a little bit, but we really basically stayed on top of that. Right here, we saw it to the penny as a bounce, and then right here. So the top of that gap is 56.75. We did close the week overbought right here, and you could see every other time we got the overbought signal, we did pull back a little bit. And so we saw it right here, we pulled back, and each time it was a pullback to the 35 EMA, which is right here. Okay, so that was SPX, and then QQQ, the implied move over here for tomorrow is between 482 and 498, and that is from options. The 30-day average volatility is a little bit wider, 478 to 496, and then on Tuesday's contract, 481 to 494. To the upside, the first level to look for, and I'm going to say it's actually right in the middle, we have been seeing resistance right where we closed on Friday. So 487.50, that is where, when Jerome Powell spoke on Monday, that's where we came up and then came down after that. So little down gap and drop. And then before that, we were seeing resistance at that level too. And we saw it again here on Friday, and then we closed right at that level. So 487.50, if you want to round it up to 488. And then above that, we do have one resistance right here. Right after we got into this bear gap, we did pull back down, and then when we bounced up, we saw resistance at 490, and that's actually closer to 491. Top of the implied move is 493 and 494 on Tuesday's contract. Above that, we do have the rest of this bear gap. This is the last bear gap that we have between where we are and all-time highs. So if bears are hiding anywhere, they're hiding in this gap. So if we do find ourselves near the top of the implied move for the next 2 days, anywhere around here, a bear call spread would probably be a great play. I would probably look to 494, 495, but 493, 494 may be a good one as well. Just depends on how bearish you're feeling. And then underneath us, we do have the 35 EMA and the 30-minute 200 moving average combo. That did catch us last week. It is a significant level. You could see after Powell spoke, we dropped down to the 30-minute 200 moving average. We also had the FOMC rate cut gap right there as well. So that could have contributed to it, but it did catch us. And then we came back up to the 35 EMA. That level was resistance until we gapped up. So 35 EMA is underneath us, 30-minute 200 moving average is underneath that, and then the bottom of the implied move is 482, 481 on Tuesday's contract, and then we do have this right here at the very top of the bull gap, and you could see that was a previous resistance that seems to have turned into a support. So 477. If you're short and we start dropping, 477 would be a great place to take profits. Underneath that, we do have the 1 hour 200 moving average and the 50-day moving average, and the momentum there is still very flat. So it's very likely that we're not going to push up too high until these moving averages can curl up a little bit. So that is QQQ. Still not an easy trading range if you're new. It does look really fun, but it doesn't look easy. I know I've said that a lot for QQQ, but it's true. And if you've been watching my channel a lot, then This probably isn't that difficult, but if you're new here and if you're newer to trading, QQQ may not be the best bet for tomorrow. And then taking it over to IWM. IWM has such a cool trading range. The implied move for tomorrow is between 216 and 222, and that is from options. The 30-day average volatility, $2 wider in each direction, 214 to 224, and 215 to 223 on Tuesday's contract. And above us, we have the 30-minute 200 moving average. Because we have the 35 EMA underneath the 30-minute 200 moving average, this 30-minute 200 moving average is going to act as a resistance more likely than not. You can see how true that is, where we saw the 35 EMA right here come underneath the 30-minute 200 moving average, but then when we gapped up, that 30-minute 200 moving average was a clear resistance. We could not get above it, and then we saw it as resistance for the rest of the day. But if we do have a catalyst that does get us above that, then this down gap right here, this is from right after Powell spoke, we have a down gap. The top of that down gap is 221, and remember, once a gap fills, a bear gap at the top will act as resistance. So 221 is where we have our resistance right now. Above that, 222 is top of the implied move, and 223 is the top of the implied move on Tuesday's contract. So 222 kind of lines up with where we did see resistance here, and 223 right here. So some interesting targets to the upside, and then to the downside, we do have the 35 EMA just underneath us, and it was a resistance all of last week. So this is where we opened the week, and after Powell spoke, that was resistance. You could see right here, and then until we gapped over it, you saw that bounce right here of the 35 EMA on the 1 hour 200 moving average, and we gapped up. When we dropped, that 35 EMA was support. So we have that 35 EMA, and then the 1 hour 200 moving average underneath that, and that was a support last week. We lost it on Thursday, but we got back above. So 1 hour 200 moving average right here, 216 underneath that, 215 is the bottom of the implied move on Tuesday's contract, and the 50-day moving average is over here, bringing us lower with that downward tilt. We are not bullish here until we get that 50-day moving average curled up, and that is not a moving average that moves quickly. It's not like the 35 EMA that turns in a day. It's going to take a little bit to get that 50-day moving average, giving us upward momentum again. So we are flat in IWM. Momentum is dead. It's one of those things where you don't want to force a trade because the technicals are actually against you here. And then lastly, we have DIA. So DIA only has weekly options, so that I have the implied move for the entire week in DIA here, and it is between 416 and 430. And to the upside, we're actually right at a resistance level here, and if we go back a little further, you can see we've been trading just underneath 423. We did close a little bit above that, but 423 has been a resistance for, let me measure it out, it looks like 2 weeks, but let me check really quickly. So 17 days, a little bit more than 2 weeks, and then we did pop up here to make all-time highs. I can't remember what the reason for that huge move up was, but we did make all-time highs, and then we dropped back down and resumed seeing 423 as resistance. So 423 important level, and then 426 is another important level. That's where we have all-time highs. And then the top of the implied move for the week is 430, and then underneath us we do have the 35 EMA and the 30-minute 200 moving average. They are pointing up, and they are previous supports. So we did have the support right here on the 30-minute 200 moving average. It was pretty messy. We did basically just consolidate towards that level, and if it was a little bit stronger, we probably wouldn't have even touched it before moving upward again, but we did drop underneath it. But what did catch us was this FOMC rate cut gap. So we have seen support on that level ever since we gapped up. So That is at 418.50. Round that however you need to. And then 416 is the bottom of the implied move for next week. And we also have the 1 hour 200 moving average. So a couple interesting levels to bounce on if we drop. We did close the week last week overbought. And the last few times we did get the overbought signal. So right here, previously it was right here. That's where we made all-time highs and we pulled back. Then the one before that was right here. We pulled back, and before that was right here. That was part of the rally. So we could pull back to the 35 EMA right here. And if we don't see that as support, then we could see lower. And if we do see it as support, then we could challenge the all-time highs. And the Dow has been making new all-time highs quite regularly. So just keep an eye on what that 35 EMA is telling you. So right now futures are down. Let's see how we open. Have fun tomorrow. Trade safe. Make sure you take profits when you're up. And I will see you guys